Let's pause for a minute. Hi, I'm Eric Glass, and welcome to Work Talk, where we discuss the most important issues facing your business with some of the smartest minds in the business. Today we're here to talk about something that every business cares a lot about, revenue, and the big regulatory changes that will impact how companies account for it. We'll also talk about the role that technology plays in helping companies transition to this new model. With me here today, Ashley Brown, Senior Director of Revenue Recognition and Accounting at Workday, Arnold Nell, Partner at PwC, and Betsy Bland, Vice President of Financial Management Products at Workday.
Good morning.
Good morning. Welcome. Let's start, high level. Revenue recognition. Let's just give it a quick definition. We'll start with Ashley.
I guess it's the revenue that a company takes based on whatever they're kind of selling, their orders and their contracts. Really the timing when they're taking the revenue, how much they might be booking and deferred and taking at a later point in time. That's how I try to describe it to my friends who have absolutely no idea what I do.
Perfect. I think we all get stuck in that place. Arnold, anything you'd add to that definition?
I think it was said, it's just really how do you account and when do you account for it.
Betsy, did we nail it?
Not a lot to add to that. In my simple mind, I just break it down to when an organization ships or delivers a product or a service, that's when they want to recognize revenue. A little more complexity and judgment behind that oftentimes, but at its most basic, that's what it is for me.
Well, let's dive right into a lot of changes coming down that are going to impact the way that companies recognize their revenue. Arnold, we'll go back to you. You work closely with companies and helping them understand, prepare for these standards. Really complex. What are we talking about? What's coming down here with these changes?
Yeah, so under today's guideline, it's very prescriptive around certain industries. We have various degrees of complexity in how we govern revenue recognition today. So the board has now put out this new guideline that's effective for public companies on January 1, 2018, and private companies, January 1, 2019. And the whole intent of the new guideline is to bring consistency and comparability across the industry. So it will replace effectively all guidelines that we had before under US GAAP and the IFRS. So that being said, we have challenges and we have opportunities. The new guideline is much more flexible. It's open for interpretation as far as judgment calls and estimation, where we didn't have it before. When you do that, then your business model may be impacted because of things that you couldn't do today. On the challenge side, it can affect simple things as sales commissions. When you move your revenue around, the associated expenses move with the revenue. It will have an impact on your investor community because the way that you recognize revenue now and the timing of it may be very different. So they need to understand what that impact is on the financial statements.
Got it. Now, Ashley, your role, you are on the front lines, right? And making this all happen for Workday. So, what steps are you taking to prepare and sort of what is that like for you and the team?
It's a major project. It's something I think about every day, and if it's not that I don't have time to devote to it, I'm stressing out that I don't have time. So I try to get as much in that I can. It's a huge project plan. It's not just accounting, right? It's about how it's going to impact the entire business. That's a big priority of ours, is figuring out what is it going to mean to our numbers? How do we explain that to our executives, to our audit committee, to our investors? What are some of the key metrics that we need to start focusing and reporting on now that will be comparable post-adoption? So it's a major project that I'm working on every day.
Betsy, how is technology going to really play a role in this process?
Yeah, I think this is an opportunity, right, to evaluate your current systems and really determine if they're the right systems for you, both now and going forward into the future. And I think the key word for me is change, right? And legacy systems just have not kept up with the pace of change when it comes to revenue recognition, right? And the changing rules and guidelines that have already occurred, but that are also going to occur here over the next couple of years. And so what that's done is forced finance organizations out of the system into Excel. Excel is pretty common when it comes to revenue recognition, but it's not the optimal place to be managing your revenue. And so I think systems that are flexible, that are configurable, that you can enable you to sort of define your revenue recognition rules today into the future and get you back into your core financial system of record is the more really optimal way to go.
And actually, I mean, you're working in a cloud environment, so anything that you would sort of add, or just what that experience has been like for you?
Yeah, I mean, having worked, at a company that did on-prem stuff, I think it's much more dynamic here. It's much more flexible. It feels like there's so many things that are happening in the cloud kind of on a weekly, monthly, quarterly basis that maybe doesn't exist. Every 4 or 5 years you get an overhaul on an ERP system. So it's much more dynamic, and the engagement with development is a nice, surprise to me coming here, that I get to have feedback into kind of where our product's headed because of these new rules.
Well, let's change gears for a moment. Can't miss an opportunity. We've got these financial experts, so we're going to play a little game. You better recognize that revenue. Okay, so I have countries and their corresponding currencies. I will give you the country, and you will try to name the currency. Everybody's a winner here. Okay, so Thailand.
The bot.
The bot. Betsy's coming out strong. South Africa.
The rand.
You have to get that one right.
Nailed
I
it.
know.
Yeah, I mean, that's one that was sort of, I don't want to say it was put in there
That
for
That
you,
was a
but
softball.
Yeah.
this one might be tricky. I don't know. Poland. The
Starts with a
zloty. Yes, the zloty. That one's tricky. And last, how about Japan?
The yen.
Yeah.
Yes to the yen. Now here on Work Talk, everybody's a winner. So we have for you these fantastic, flexible, agile Workday calculators. There's one.
All the currencies are
All of the currencies
codified in here.
codified.
All right.
You need little else. You think of advice, right? So we've talked about this is complicated. There's a lot to it. Big projects. How do we fit it in? So what advice would you give companies that are really starting to embark on this? Maybe we'll start with Arnold for this.
Yeah, I mean, there is a structured approach that they need to go through from now, if you're a public company, for the next 21 months. I mean, we typically recommend assess where you are, what the impact of the guideline would be on your current processes, people, and technology. Understand the contracts and your revenue obligations that you have in place. Map that out to what the new guideline is going to do to you. Identify those gaps. Address the systems and those kind of things, and also the data points that's associated, and that's important. And then start the communication process and the drafting of the disclosures, which is the embed phase. And that's really where you enable all the things based on the new technology to get ready for the launch date.
Offer any other thoughts, just advice, things to think about?
This is a catalyst, right? An opportunity to make some changes, and any change involves, I think, process and technology. I'm the technology product person. I think it's an opportunity to really look at, what kind of tools are you using or having to use today, and are there better options out there? And I think the key is around, for us, of course, how do you find a tool that is adaptable, flexible, configurable to change, so that you can model your revenue recognition rules today, but also have a system that's adaptable as these new changes, move into place.
I imagine in the number of different companies that you talk to, there are those that have the flexibility, those that are facing perhaps a very inflexible system. Are you seeing is the worry and the and the challenge feel a little bit more daunting to those that realize that they maybe don't have all the flexibility they need to get this done?
Yeah, well, timing is causing a lot of that because the date's been set now for a while, and so the date's not moving. So you have that concept that time is running day by day, is running out on everybody, and then you have the system components to it. And so that technology, in most cases, more often than not, the flexibility is not there. So you can imagine what that changes that they have to go through based on some of the old prem systems that they have, and how do they make that switch over to a more flexible environment to support their business models.
Yeah, makes sense. Ashley, this is actually advice to yourself
Yeah.
as well as everyone else facing this kind of.
Yeah, I mean, the two things that come to mind is stop procrastinating, right? Because there is the standards out there. It's been delayed already. It's not likely to get delayed again, despite what some people are hoping and praying for. And then the other thing is don't get overwhelmed, because there still is time. And so if you start doing things now, you can get to the point where you have enough leeway to make the system changes you need to, or the operational changes you need to, figure out what the impact's really going to be able to communicate it early enough so that it's not a surprise to anybody, get your policy out there so that your auditors can kind of sign off on it before you get to the point where you have to adopt. So it's one of those things, just you kind of have to jump in both feet and start working on it so that you're not pressed for time at the end.
And this is not so much just an accounting exercise that we're going through. I mean,
Right.
the impact in the organization is far upstream as well as your back offices. It includes all functional teams for the most part. So it's a big exercise you have to go through to stand up this, call it a project, and then start executing on it. But the timing is now to start thinking about it and start executing.
So I will thank my guests for their time today on revenue recognition, and thanks for another great episode of Work Talk.
Great. Thanks for having us.
Thank
Yeah,
you.
Thank you.